Does Jerome Powell have it all wrong when it comes to the state of household finances and savings and what is going on with the price of gold? I'll sit with Rich Check-in of Asset Strategies International today to discuss. Hello, everyone.
Welcome to Inside the Vault with SWP. Join Mark Yaxley as we explore the latest news, reports, and some bullion basics for investors old and new. Let's get to it.
Hello, everyone, and welcome back to Inside the Vault with SWP, a weekly show where we dive into the world of precious metals with the brightest minds in the space. If you're new to the show, you can find our previous episodes on the Strategic Wealth Preservation YouTube channel. And we've noticed recently that many of our viewers are not subscribers. So while you're there, please do like, subscribe, and feel free to add your questions for future shows, and we will cover them. I am very excited to be joined by Rich Check-in, who joins us again very shortly. But before we get to Rich, let's hop over to CEO of SWP, Mark Yaxley, for our weekly market update. A bit of an exciting one today, Mark.
Yeah, Jeremy, we don't often get to say that gold has hit a new all-time record high. It happened this morning. Gold was just over 2140 an ounce priced in US dollars. Gold has now risen over 5% or $100 an ounce over the last 4 trading sessions. The yellow metal had already established new record highs in most major currencies prior to this morning's rally, but really the big news here is it's hit a record high priced in US dollars, and that's more significant because it will capture headlines worldwide and potentially bring more investors to the party. Analysts, funny enough, are calling this the quiet gold rally because it seemingly came out of nowhere. While we did see some slightly weaker US economic indicators last week, it was nothing that typically would have triggered a rally of this magnitude. Now, gold continues to benefit from strong buying on the part of central banks who perceive growing macroeconomic and geopolitical risks. That's nothing new. I expect that central bank buying will continue, but it's also seeing strong demand from private investors seeking physical metal, particularly in China and Eastern countries. Silver is currently just below $24 an ounce, which is encouraging, but still lower than most silver bugs would expect, given that gold is pushing all-time highs. Silver is 50% lower than its all-time high, so there's definitely some potential upside there. And as you pointed out, we have the perfect guest today, Jeremy. Rich Check-in is a gentleman that's been covering gold and silver and working in the industry for over 20 years. I was saying to him before the show, we picked the perfect day to have him on, so looking forward to Rich's thoughts.
Yeah, let's get right to it and bring Rich in. A lot of what you covered there in your market update is what we're going to touch on today. As I mentioned, Mr. Rich Check-in is the president of Asset Strategies International, an innovator in alternative asset ownership, including precious metals, specializing in global asset protection. Rich, welcome back to the show.
It's glad to be back. Thank you for having me. And also, you got to add in there, and a big fan of Strategic Wealth Preservation, who we work with very closely over the years as well. So,
thank you for that. We're a big fan of yours as well. And like I said, happy to have you back. Let's jump into things. I know you want to talk about central bank buying and retail investor behavior at the moment. Let's just start with what Mark covered at the very top. We've seen gold make some pretty strong moves at the end of last week and to start this week on relatively little news economically and geopolitically. Interest rates obviously still high. The dollar's still strong. What do you think is the reason for this move over the last couple of days here?
Well, I think if you have to put the guilt or the blame on something, I think you could look at the ISM survey that came out, which was slightly less bullish for manufacturing than analysts expected. You could also look at, prior to that, the PCE numbers coming out with slightly lower inflation numbers than people expected, and that's probably the one catalyst that got things going, if you will. But yeah, it's kind of an interesting market. So we have a rally without investors. How the hell do you do that? The real answer here is central banks have been propping this market up for a couple of years, actually 11 years they've been net buyers, I think, at this point, maybe 14. I might have my numbers wrong, but the last 2 years have been unbelievable. Last year, 2022 or 2023, correction, in 2022, 2 years ago, they went ahead and bought more than they had in 60 years since they started keeping track of the numbers. And last year, 2023, they almost did it again. They were short by about 4%. 96% of what they did in 2022. So central banks are propping this up, and they are motivated by the same fears that you and I should be motivated by as investors. Wealthy investors continue to buy. They're not struggling in this economy. But I'm telling you, the middle class is out of this market. And there's some key reasons for that. I think we're probably going to get to them. But until they get in, I don't see this long, meaningful, sustained rally. But there's signs that they're starting to come around.
Yeah, and we are going to get to that a little bit more in just a moment. It's interesting. We've seen gold perform so well, not only in the last couple of days, but over the last, year and a half. We've had certain guests on our show recently who've said that if you had told them back in, early 2022 that gold would be trading above $2,000 in this kind of macroeconomic and monetary policy environment, that they would tell you that you're lying. Do you feel the same way? Like, is this overperforming to you right now?
I don't think it's overperforming. I think it's the impact of central banks and wealthy investors, and that's it. It is a bit of a mystery to see investors out of this market, yet seeing the price hold in this range above $2,000 to 2,100. It's been there for 3 years. I hear a lot of people saying that, gold is high, it's near all-time highs, and I'm like, you've got it all wrong, right? Gold is not at the end of the rise. It's been consolidating for 3 years. It is building momentum for the next leg up. So gold is actually cheap here at all-time highs, if you want to say that or not. I mentioned off air before the show, you don't see premiums come down in a market when investors are buying hand over fist. You don't see wholesale suppliers come into a retailer and ask them to do more business with them when they're doing more business than they can handle. This market is not at the investor level, but it's starting to turn, and that's when things get really fun for gold and silver.
Okay, so let's talk about that. Let's kind of get into the retail investor behavior right now. You mentioned before we went on air, you've been speaking to investors recently. The interest in precious metals is kind of picking up. Curious if you can provide some insight into the conversations that you've had, and also kind of dig into that premium conversation a little bit and what it will take to get these household investors back in the market.
Yeah, I think the rally is part of it. It's what's going to drag them back into this, because they're going to realize that they need to, or they're going to miss the boat. We've noticed, and I've talked a little with Mark in the past, over the past year, since July really of last year, we started to see investors selling precious metals. Even though the market wasn't falling, we've been seeing them sell. And, we started to ask questions. Well, why are you selling? We had our thoughts. We suspected that Fed Chairman Powell had things completely wrong. When he says that household savings are stronger than anticipated, when he says that consumers are spending more money because household finances and balance sheets are better than they ever thought they were. He's still off base. It is not even, I can't even calculate how far off base he is. What's going on is people are spending more money this year versus last, because everything this year costs 3% more than it did last year. And everything they bought last year, same stuff they're buying this year, is 10% more than the stuff the year before that. Everything just costs more. So household spending is up just so they can buy what they need. Now, the question is, how do you pay for that? Right. So what we used to do, in the good old days of zero interest rate policy for a decade or more, we just went ahead and tapped into the piggy bank that we live in. Right. We refinanced, take cash out of our house. Didn't matter because interest rates were nothing. And we spent it on whatever we had to spend it on. And now if you do that, you're going from 3% to 8% or more. That source of funding is completely cut off. So where did people go? Credit cards. Right. So now we've got $2.83818, I don't know, trillion dollars in consumer credit in the US at 20% interest rates, and delinquencies are on the rise. That source of funding is cut off. Where do they go next? The only liquid store of purchasing power they have in their portfolio, which is gold and silver. We actually had a client call in just a couple of weeks ago and said, hey, I've got to sell some gold and silver, and I'm so sorry. I promise you, I'm going to get back into the market, but I got to pay off my credit card debt. And we're like, listen, it's your money. You do with it what you will. I'm just so glad he had it to meet that financial need, right? That's what it's there for ultimately. And I think people are going to start realizing that we've consolidated, we are going to move higher, and they've got to find a way to find money in their portfolio. I think they're going to do that with IRA funds. I think they're going to do that with reallocating assets. I think they're going to do that with just forcing themselves to set a little money aside and do some sort of accumulation program, because we all know that over time that adds up quickly.
Yeah, it's very interesting that you say that, because we see a lot of the same things when investors come to us and go to sell their metals. It's much the same. It's to cover an expense. It's to cover something that
They're
they
not
need.
selling it because they want to, I promise you.
And that's exactly it. They really do say, I wish I didn't have to do this, but where else are you finding the funds to cover expenses that are necessary? Now, on the other side, as you mentioned, a lot of the people that you've been speaking to, there's a lot more interest in buying precious metals. What are those people saying to you that you're speaking to?
Well, they're asking the real buying questions. You can get questions from an audience where people just feel, oh God, it's kind of awkward silence. I got to say something. Or you get questions that are clearly buying questions, like what is the difference between owning physical gold versus owning a mining stock versus owning an ETF? When I buy the gold, where do I store it? Do I take delivery? How do I do that? What are your procedures for buying gold, silver, platinum, palladium? Those are real buying questions that people are asking, and it's clearly different than just filling air and dead air. They're buying, or they're asking questions that will help them buy because they're thinking about buying. There's a huge difference.
Okay, so then, you expect this, retail investor to start, maybe upping their purchases or start to purchase precious metals in the first place. We mentioned, obviously, that, the metals price has been propped up by central bank buying.
Yep.
You actually did an interview with Kitco. This was a few months back, and you said that household purchases were down 14% year over year, and that you expected that to kind of pick back up.
Yep.
As you just mentioned, people don't have that excess cash to be purchasing precious metals. So, when does that start happening? When do retail start rushing back in?
Yeah, I think you're getting a little bit of the people, like I said, finding a way to buy it, even though they didn't think they had money. I'm telling people now, when they say I can't afford it, I'm like, you can't not afford to buy gold right now, because it's going to be higher in the future. That's what happens when we expand the money supply, and everything costs more over time. But what really is going to get this thing going, in my personal opinion, is when the Fed starts cutting rates. And the big question is when. So the reason I think we saw this little spark, this little rally right now, is it seems like every bit of news that suggests that the Fed might start cutting rates triggers almost the market willing, the rates lower. And I think that's a little bit what we're seeing right now. And that PC number wasn't much lower than expected.
Right.
The ISM number wasn't much lower than expected, but it doesn't take much for people to believe that here we go, now this is the time. When the Fed actually does start cutting rates, and eases that burden on the middle class, which I really think is struggling right now. I think the Fed has broken the banks' balance sheets, and I think they're breaking the backs of the middle class. And when you get the middle class with a little bit of relief, those interest rates start coming down, they see a little bit of an end in sight, then I think you're really going to see this thing take off. Until then, we're going to start moving that direction. I think you saw a taste of it this week.
Yeah, and I mean, we noticed it back in late November, early December, when everyone was thinking the first Fed rate cut was happening in March. We saw gold kind of pop off. We saw other asset classes, and Jerome Powell literally came out and said, "Hold on, you're getting ahead of yourselves. We haven't promised anything at this point. Kind of feels a little bit like Groundhog Day again, but we haven't heard the same conversation from Powell saying, hold your horses. All asset classes seem to be flying right now. We've seen crypto go absolutely crazy in the last week. Gold is making huge moves. I wanted to you mentioned something very interesting there about the banks. And,
Yes.
we're starting to see that kind of bubble up again. We're a year removed from the Silicon Valley Bank issue of last year. Just
Now we're dealing with
recently.
New York Community. Yeah.
Right, exactly. And just recently, Drome Pal was on 60 Minutes, I believe, and he said, some of these smaller banks may have to fail or be merged out of existence into the bigger banks, which I think, plays right into what you were just saying. Is he preparing us for something with those words, or is it just, a bit of a warning?
Oh, I'm certain they know exactly what's going on. These banks are not valuing assets at market, hoping that they never have to sell them until they recover. But the way things are going, I'm pretty sure they're going to have to sell them before they recover. They're going to realize those losses, and I'm pretty damn sure the Fed knows the state of those balance sheets. If they don't, we should fire them all and get a new Fed because that's part of their damn job.
Right.
So
A very, very good point. Moving on to another interview of yours that I watched with Rick Rule, who, all of us precious metal, in particular gold bugs, love and respect.
yeah.
You and Rick both mentioned that you thought gold would perform very well, not only this year, but next into 2025 as well. Recently on your Asset Strategies International newsletter, you talked about what it will take for gold to hit $3,000. Is that kind of, your target price here? Or you think we're moving higher than that?
I think we're moving higher than that if you wait long enough. I mean, I hate putting
Sure.
the level and the time because then you're going to be wrong pretty much all the time. But what Rick said there really surprised me. I fully expected when I asked that question for Rick to come in and talk about his favorite resource in 2024. I thought he was going to say either uranium or water. I really did.
But
And he surprised me. He said he loves gold, and what he thinks is going to take for us to get there, wherever there is, 3,000, whatever, is just a small change in buying habits. A reversion to the mean is what he talked about. Basically, that, I think they said on average, typical gold makes up about 2.5% in a portfolio and it's down to about 0.5%. He says just a small change in that percentage, a reversion to the mean, is enough just to make the market go bonkers because it's not a big market to start with. I thought that was very interesting and pretty telling. And that may be what it takes, just a small psychological change in how much gold you own. It doesn't take much.
Well, and I mean, think about it this way, typically when you're talking portfolio construction, people say, 5 to 10% in gold or precious metals is, a pretty good target. Imagine if that 2% increases to that 10% mark, what that does to the price.
Yeah, I'm not going to hold my breath because I've been doing this
Right.
for 28 years and I don't think I've seen it yet. If I did, I missed it. But I think Rick is onto something. I think a lot of folks settle around 5%, and most of that, honestly, I think is because portfolios aren't that liquid. It's tied up in real estate. It's tied up in this, that, the other. A lot of us have invested heavily in our own businesses or whatever the case might be. They really can't tap into that cash. They haven't kept their powder dry for the next volley. So I think the number is going to be lower than what we think it ought to be. I love 10% just because of the studies that have been done suggesting that 8 to 12% is kind of an optimum target position. I think World Gold Council and others come out and said that. And 10% is easy math for me. I'm a Polish kid from Jersey, so
Okay, let's talk about silver for a second now. Mark mentioned it at the top of the show. We know that gold leads the precious metals market. Silver tends to follow. Silver investors have long been waiting for a rally to all-time highs. And again, you and Rick spoke about it recently. In spite of silver's industrial demands in a world that's moving increasingly more to sustainable technologies, why is silver kind of lagging? Where does it go from here? Is it, what's it going to take for us to get back to those all-time highs?
my gut feeling is sentiment hasn't totally changed yet. We're starting to see signs and glimmers, but gold is your first mover. in the space. It moves up or down first. Once that trend is established, and I don't think trading in range for 3 years is an established trend. I think we're getting ready to establish a trend. But once that trend is established, silver tends to follow and outpace both up and down, right? So I don't think we're quite there yet. I am encouraged though, because the end of last year, actually, I want to say last year silver was flat, gold was about 13% up, best performing commodity. If you take away Bitcoin, and we could debate whether that's a commodity or not. But gold performed well. Silver really didn't do its job keeping up with gold last year. But over the last month, even with gold's rise, I think you said what, $100 some odd in 4 trading sessions. I look a month ago when we were putting our newsletter together, gold silver ratio was 88. Took 88 ounces of silver to buy an ounce of gold. Today, as we hit these new highs, takes 88 ounces of silver to buy an ounce of gold. So silver's keeping up right now. That's encouraging. I think it's got to keep up for a little while. And then once people move into gold and then start looking to diversify, and or gold starts getting up in price, and they're like, well, now it's getting expensive. They're going to move to their, the poor man's gold, if you will, the younger sibling, and we should see that money pouring in. Silver's a smaller market, though. So when that money pours in, it's going to have a bigger outsized impact. And that's when I think it gets going, but not till gold establishes that trend. I don't think it's done yet.
And then how much of that, depends on the actual industrial use cases? Are we seeing that impact the price of silver yet, or is it still something that's, just a thought in the air?
I think that's what's given it the stability. It's kind of like silver central bank buying, if you will. I want to say that for like 11 years prior, silver was produced at a deficit, or I'm sorry, at a surplus. And the last 2 years, it was produced at a deficit, and the last 2 years wiped away 11 years worth of surplus. So silver is ready. It's going to take its cues from gold, though, and I think that steady demand is what's keeping it in the game, if you will, or keeping it within touch, within reach.
Okay, then let's finish here talking about the two other most popular precious metals. We've got platinum, palladium, again, which have their own industrial use cases in the auto industry and also in green tech applications. These two tend to be obviously quite a bit more volatile.
Yep.
They move irrespective of gold and silver. I was reading again on your newsletter that they could be primed for a positive move. Are these metals in a good buy zone at the moment? And what part of a portfolio, where do they sit in a precious metals portfolio?
Yeah, I used to love the fundamentals for platinum. Since it went south of palladium, most people haven't been able to figure it out, be honest with you. I think part of that was substitution into palladium because it was cheaper at the time, but it's been more expensive for a long period of time, and we haven't seen the substitution back to platinum. These are straight industrial metals. They're supplied by two countries that are not the most stable, if you will, with Russia and South Africa, and they produce the world's majority of platinum and palladium. I think they're just hard to pick. I think it's a much smaller allocation. I have friends that tell me stay away from platinum. It doesn't look good in the short term, but I still look at it at a point there. It got close to the palladium price, within about $5-10, closest it's been in years. And I thought, okay, maybe this is the moment. And then it went south, and palladium kind of held tight. I like gold and silver better, be honest with you, just because even though they both have industrial applications, silver more than gold, but both of them have them. They've both been forever monetary metals, and I think that's what gives a bit of stability. The most stability to gold, but a little bit of stability to silver, and you don't get that with either platinum or palladium. It's more of a speculation, and when I hear that word, I think a smaller allocation for sure, 1-2% of the precious metals tops.
Right. Agreed. All right, Rich, listen, we really appreciate your time. As always, thank you for joining us again on the show. In closing, I'd like to get any final thoughts that you might have. It could be about the precious metals markets. It could be about kind of macroeconomic policy. What's at the forefront of your mind? And then to finish up, if you can let our audience know where they can follow you, yourself and Asset Strategies International for more great insight.
I appreciate that. Yeah, my final thoughts are, you're going to hear a lot from the mainstream right now about how gold's at all-time highs and it's making new record highs. Every time you hear that, you got to think 3 years of consolidation. This is the platform for higher, not the ceiling that you bump your head on before you go lower. In terms of finding a way to buy it, find that way. And I don't know if it's going to be popping up tomorrow, next month, whatever. I think for sure sometime this year we will see a healthy, sustained run. Probably not till the second half, but start buying it right now. You can't afford not to pick it up at these prices, in my personal opinion. How to find us, 800 number, 800-831-0007. That's 10 better than James Bond. Or www.assetstrategies.com. Happy to hear from you, and thanks for having me on as always. I know a great place to store if you buy the metal from me too, by the way.
Awesome. Thank you very much, Rich. And I think that Mark has a very poignant Bullion Basics segment for us today. Mark, take us to school.
Yeah, thanks, Rich, and thanks, Jeremy. I wanted to dive a little bit further into today's price because it is a special event and we have to commemorate that a little bit. But looking at it really from an investor's point of view, and you guys know when we hit these all-time highs, one of the first questions that we receive as a dealer is, should I be buying at record highs or did I already miss the opportunity? And I know Rich alluded to that. So I just wanted to share my thoughts on that. You know, it's a common understanding in the investment world that buying anything at a record high is generally not advisable, simply because you'd be paying the highest price ever for that stock or for that commodity. And there is a fair chance that the price will dip before making a fresh new round of highs. Now, in this particular case, gold's rally is based on strong demand, particularly from central banks, which I do not think is going to peter out, coupled with the expectation that the Fed is going to start cutting rates within the next 3 to 4 months. So it hasn't actually happened yet. You've got that strong support from central banks, and the event that the market is pricing in hasn't occurred yet. And in fact, it's not a certain thing at all. So based on current macro geopolitical events and the fact that central banks are going to keep buying, if and when the rate cut picture does become more clear, I do think we can expect to see another leg up for gold and for silver, which actually makes today's prices, albeit all-time highs, look like a pretty fair price to pay for an ounce of gold. On the flip side of that, if the question, you know, the second question that comes from the other half of our client base or investors is, should I be selling at these all-time record highs? And on this point, I'd be less hesitant than on the buy side. You know, selling any asset at an all-time high is a win, regardless of what happens next. If you bought gold at $1,200, $1,600, even $1,800 an ounce, you'd be realizing a healthy profit, and you should pat yourself on the back, and there is an opportunity there to take some profits off the table. However, for the same reasons stated above, we do expect to see more upside for gold and for silver in the coming months. So I certainly would not be selling my entire position. I might take a portion of my profits or the profits that I've realized thus far off the table, but keep my core allocation in place. Lastly, an important note is the product premiums. You know, we talk about product premiums on the show. We talk a lot about it with our clients. Product premiums have a really significant impact on the total price that you pay for physical bullion. And right now, product premiums are relatively low because this rally, you know, seemingly came out of nowhere. Product premiums have not yet adjusted, but let me tell you, it will not be long before wholesalers and retailers start adjusting their product premiums upwards to reflect the demand in the market. So take advantage of that, the fact that the product premiums are low, and act fast. So my advice in conclusion is to monitor the price action closely over the next 2 to 3 sessions. Does it stabilize? Does it continue to move sharply? And if you're considering either a buy or a sell transaction, the cautious thing to do right now, Jeremy, might be to cost average in or cost average out over the next, say, 2 to 3 weeks. And that way, you know, it takes a little bit of pressure off yourself in making these difficult decisions at an all-time record high.
Yeah, and I think just to sum all that up, and Rich said it just a couple minutes ago, that, you know, in spite of us hitting a recent all-time high, gold is still cheap here. I think that's, you know, the key takeaway. It's better to be a couple weeks early than a day late. So yeah, great segment there, Mark. Thank you very much. That is all for us today. Thank you so much for watching, and thank you to Rich Chekin of Asset Strategies International for joining us. Head on over to the Strategic Wealth Preservation YouTube channel for all of the information you need to know on precious metals investing, or email us at info@swpcayman.com and one of our team will happily assist you. Until next week, stay safe and happy investing.
Thank you for listening to Inside the Vault, the podcast that opens the door to precious metals. We hope you learned something new and enjoyed the show. See you next time on Inside the Vault with SWP.